All right, good maybe morning, maybe afternoon to y'all. So I don't have like a big hard topic that I wanted to cover today. I thought we could kind of get regrouped on options and anything else that y'all kind of wanted, so a little bit self-led. And then I don't know if BMO is going to talk or if he's just joining today. BMO it could potentially. All right. So yeah, this is just the chart right now. But I wanted to kind of base this off of y'all's questions a little bit. I've had a few options plays that I've shared with y'all. I haven't had a ton, and some of them have kind of been larger account stuff. I'm trying to get organized with some small account option stuff. But I wanted to make sure that we all kind of understand that. So how many of y'all are interested in options, and how many of you just want to talk about futures today? Because I can kind of do both a little bit. But what I wanted to kind of show is that we've got. So I'm going to put the ES on the left of the screen. It's just a clean ES chart. And then on the right, I will put the SPY. So these are basically, this probably wasn't the best chart to show this on because it tries to fix it. But basically, if we're trading the ES futures on, or the ES for futures, we're probably going to be looking at the SPY for options, but you can see like it's literally the same chart. So I have extended hours turned off on this one right now, but if I turn them on, we'll get that pre-market and it looks basically exactly the same. I'm gonna turn this orb off over here too. So you can really trade the chart, or SPX is the 10 times leveraged SPY. You're really looking at the same pattern. Sometimes you'll get a little bit different wicks and things, but this is why switching from futures to options is so easy, because if we're looking at indexes already, we have an index counterpart. And the other thing that's really nice about this is, so the ES has data from all night, which can be really useful, but you have to kind of prioritize the daytime data over the extended hours data because of the way the volume works. And you can see that right here. Obviously, most of our volume is in the day. The options will have a little bit of pre-market data, especially the index options, but for the most part, there's not very much volume overnight, and that data shouldn't have as high of a priority. It's still important. We're still watching pre-market highs, pre-market lows, but a lot of the most important data actually comes from the regular trading hours spiders chart. So this is why I'm looking at both of these all the time, and I don't want it to seem crazy and hard because it's actually really simple. But one of the things, I don't want to focus on this one right now, but one of the things that I'm always telling y'all is like some of my best trades come from these divergences. I was long as shit on this day when we had a bearish MACD divergence like that. And so when you get rid of all of that kind of extra lower quality data that happens overnight, you can sometimes see things like this more clearly. So even if you're not trading the options and you're focusing on the futures option, or not futures options, the futures contracts, there are futures options too. We don't need to get there right now, but you can still really focus on what's actually happening to the highest volume things. And so I just wanted to kind of review how that's really important. And last time I talked about this MACD setup, and I've done another video on it, and I have another video coming out on it. So there's lots of information on this MACD setup. But when I'm getting bias, a lot of times everyone comes to me, how are we going to get a bias for today? And a lot of times it's on these higher time frame ETF charts. So this one's the SPY. You can do the same thing on the QQQ for the NASDAQ. And I like the 30-minute and I like the hourly for the most part to get these higher time frame bias signals that I can then go dive into the lower time frame charts to actually trade. So in that way, it's easy to kind of double dip and do both of these at the same time where you're trading the options and the futures. So sometimes the future is going to be a better instrument to trade because we don't, maybe you think we're going to get this drop, but we don't know if it's going to happen in the morning session or the afternoon session. We just have this idea that at some point some resistance is going to pay off and drop. We don't necessarily want to be burning theta in options, and we can get to that in a second. So that's why we might use something like futures when we're just looking for a really clean level to level type move. But if you're not really sure, or if you think the thing looks choppy, then we can get into more complicated trades where we're selling premium on options, or getting these directional moves by buying and selling naked calls and puts. But it's all kind of the same idea. So even though there's more steps on options, we're still looking at the same charts. The nice thing is when you're back out on these higher time frame charts and you see a bigger idea like this, you can trade this for more than one session. So you can buy a SPY call or put that expires in 3 or 5 weeks or whatever, and let that play out over time, so you don't have to nail the timing as much. Because when we're trading futures, it has to happen by the end of close, basically. So it gives us a little bit more freedom than options, where we have to do it before theta runs out. But then we can switch back to the ETFs to trade these swing type ideas. And that's how I've kind of ended up using options. So I used to be hitting these 0 DTEs where we'd get a huge pump on these. I still do sometimes, but not very much. Most of the time I'm focusing on lower time frame for futures, some options, but not very much. And then I can swing trade with options. This is where if y'all want to ask any questions, if you get any confused, I'm not trying to make you feel behind or stupid or anything. So if I'm moving too fast through any of this, just let me know. But what I pulled up is Tasty Trade. It's the easiest one for me to show you guys. So what I was talking about, so the options have dates. We're used to the quarterly contracts. Hopefully y'all realize that the futures contracts are quarterly, they expire. So our futures contract is based on the value of the index at that expiration date. And the options work a little bit different because you're basing this on strike price, which is basically when this expires, where you might think that the price would be. So right now on the spiders, we're at like 693.40. So this is what that looks like on the option chart. Is we have all of these different prices. These are all of the different potential prices that SPY could be, more or less. So it could move higher and get up into these values. It could move lower. If we want to place a leveraged bet, we could buy a call or a put. So if we want to place a leveraged bet that the index, the S&P 500 index is going to move higher, then we can place that bet by buying a call. And if we think it's going to move lower, we can place that bet by buying a put. It's the reverse when we sell it, and that's why I don't want to get into this on this lesson. But the tricky part about that is you have theta and delta, and there's more Greeks. You'll hear about those a lot. These are the ones that we pay the most attention to generally. And all of these are affecting these premium prices. So the premium price right now, we have the bid and the ask. So those are the buyers want to be here, the sellers want to be here, and there's the spread. The market maker is going to make money on the difference in that spread there. They do it on futures too, but it's a little bit more obvious when we're on options or basically anything else. So now that we're kind of hopefully all aware of the very basics of how calls and puts work, that is where we find that. So these are the different expiration dates. We can go all the way to today. And so these will be the cheapest because, I mean, what's the chance that we're going to get back up to 696? It's not real great. So the value of these is not very much because you're basically going to multiply these by 100 because the contracts come in group of 100 basically. So for 14 cents, you're going to pay $14 for a 696 call. But if the spiders close below 696, this is going to be completely worthless. So that's why a lot of times we're just speculating on these before we get to the day of expiration, so we don't end up where all of this premium is sucked out. You can see only the ones that are in the money, which is where the strike price, if it's a call, we want the strike price to be above it. If it's a put, we want the strike price to be below it. but it's in the money because where price is beyond the call or put that we're holding, but in this place of call. So if we had a 690 call, it still has volume, even though these are expiring today, because the chance of this expiring in the money today is decent. And then this thing actually has some value, because then you have the option to buy this 100 SPY calls at $690, even though the price is at $694. There's a few different ways that I enter swing trades based on these, but I posted earlier that I couldn't remember if this was like a re-up on my SPY calls for this month, because what I end up doing is I go to the daily chart. Some of y'all have seen this before, and this is a review, but I just want to make sure that I think this is a really good example of how these work. So I use Keltner Channels to just kind of watch what the normal and extended ranges of things like the S&P 500 could be. This is the spiders, so we're usually looking at the ES. Right now I'm looking at the spiders, just the SPY. And so when I look at this, I can tell when we're extremely low. We don't usually keep pushing these extremes. Every once in a while we do, and I can take some heat if I buy calls down here, but most of the time we don't. So most of the time when we get to an extreme, I can buy calls and wait for them to come up. And then this is where I have to worry about the expiration date, because I can't come in and buy today's and expect a move to be really significant. So if we were down here on Thursday, and I think this is when I re-upped those, I want to be a call buyer down here when price is really low and wait for this rubber band back up. Otherwise, I have a stop loss where it's going to be smaller than this move that I'm looking to get back up to resistance. So I just need to make sure that it makes sense where I can have enough candles, because every candle is a day. So about how many candles would it take me to make a similar move to these other moves if I'm down at these extremes? And that's why I usually make sure I at least have 2 or 3 weeks, because if that's a week or two, I don't want to be worrying about all of the premium being sucked out by the Greeks as we get close to expiration date. And the whole reason that the Greeks are doing that is because there's not going to be value on it if it's not in the money at expiration date. Even though we're just speculating and getting in and out, we have to leave room for that. So these are the cheapest because they're the most volatile right now. They're the most, it's expiring today, so it's either going to be in or out of the money today. Very volatile. And then this is where we have to look and make sure that we can have enough time. So I like to trade the monthlies. They have a lot of volume, and I don't have it on this chart, but you can add a column for open interest and see where kind of the other big players are hanging out. And it's generally on the monthlies. So I want to make sure that I have 2 or 3 weeks. Right now, I don't have 2 or 3 weeks for February, so I'm looking at March. On Tasty Trades, and it's different for all the little platforms, but this W means it's a weekly. And we used to have weeklies that expired on Friday, and then they added where they expire throughout the week, but they're all still weeklies. And so that's the difference between a weekly and a monthly. The monthly is going to be, these expire every month. This one we have option expiration, or OPEX days, OPEX days, however you want to say it. I've heard it said both, but that's what they're talking about, is because we have monthly options expiring and weekly options expiring and the dailies and all that stuff. We also have quarterlies, so we can end up with a lot of expiration dates that all line up together. So then when we go out to the March, these are a lot more expensive, and that's kind of the trade-off. If you have more time, you're going to pay for that. Because it's time versus volatility. Which one do you want to pay for or save money on? And so that's kind of the deal. So right now, these are really expensive, and this is why I'm saying I haven't had a ton of small account plays. But the idea is, when we're, and I'll get to the indicator question in just a second, but when we're way down at these extremes, so this was 60, well, I don't think I got that good of a deal, to be honest. I think I was in here more around when the price was around 680. And so I was looking for a push up to support around 695. So that's $15 difference. So if I go over here and kind of look at these monthlies, and then we could count 15 of these away, we're going to be down here. You can see they're a lot more affordable. So this is the kind of pop that I'm looking for to sell into. And you can see how a lot of that, like even right now, moving from this position to that position, and these premiums are going to change over time. But that's where we can kind of get that 100%, 200%, the big push. When these things are surging and we get the big candles up like that, the premium surge also. So that's why they can be really fun. So this is Keltner Channels, and I have them adjusted. I have this as Barbie's toolbox, but I shit you not, TradingView won't let me share this. They say it's too generic, but all I have is 2 Keltner channels. So you can load 2 Keltner channels. This is why they won't let me publish it. It has 2 Keltner channels and my favorite EMAs and some other things that I can turn on and off, and they won't let me show this. So if you want to make this yourself, I've put it for free and they take it down. You can just search for Keltner. And what I do is I kind of adjust them for the asset that I'm using. And I turned off the shading and stuff too. I turned off the background and the basis because that's basically a center line. And then you can change the input to get it kind of closer to where you want. I start with a 2 and a 3, but I noticed that depending on which platform I'm using, the 2 and the 3 are different. And so I adjusted this one. It's like 1.8 instead of 2 or something like that, so that it lines up with my NinjaTrader. But it doesn't have to be that precise. Some people use Bollinger Bands. The point is to show you where the extremes of the market is. And then I use a 21 EMA as my median instead of the basis. It's just personal preference. I know other great traders that use different EMAs or they use the center or whatever, but that's just how I do it. Yes. Okay. So BMO is using open interest for his leap plays as well. So I use the same idea on swings. I wish I had, do we have open interest where I can add it on here? Let's see. Because I did the same thing on my shorter dated Microsoft. But I'm going to see if I can find BMOs in here too. So he was looking way out. So I'm going to go back over to this chart because I'm going to do a copy and paste. These are really expensive because it's a BMO play, but I can use mine as an example here too. So it was too big when I tried to do the whole chain, but the open interest column is this teal column. And then I added the purple volume column also because that helps me know if this happened like today or previously. So this is the 500 calls on Microsoft. This is these are leaps. So a leap option means it's really far away, like a year plus. I've heard some people call 6 months plus leaps also, but it's a very long-term swing. So on the Microsoft December 28th monthly calls, this is the 500 call. I have the puts are on the other side. I cropped that out. So this is just the call side. This is the 500 call. I've got Greeks and all kinds of stuff that I like to watch for other strategies, but this is where the open interest is. So this shows you where the big boys are hanging out. And then if I go to the shorter dated ones, and I watch this too. So I'll pull this off on my watch list and my options platform. On my watch list, I added a column for open interest so I can watch this as we're going through too. This has kind of become an open interest deal. So this is the other one. It's similar to BMO's idea. This was just a shorter term idea that I had, and this was based on Microsoft being at the 400 support level too. But we came down to the Microsoft 400 support level, like that's a good price for Microsoft. Let me go see what's going on the option chain. And then I noticed that the March, ignore that, that was in my screenshot, but the March contracts 18,000 instead of 3 to 5,000 on a lot of these for these 450 calls. And that's a pretty good price. It's almost small account friendly. It might be for some people, depending on how small your small account is. So that's what I look for. And then I look to see if those guys are still there. There's been some action on that today. This is actually more than there was yesterday. Yesterday it was 17 something. So more people have bought into this or averaged into this or whatever it is for these Microsoft. And these are the March of this year, March 26th, 450 calls. On the APLD too, but APLD is going to be even less small account friendly than these guys. So this is, I guess, partly review, partly some new information of how I generally use options. I did skip over a lot of basics. I know Boba's been working on some of the basics. Do y'all have any questions about how this sort of thing works? The way I look at it is safety in numbers, which is kind of opposite the way I thought trading would be. When I came to trading and I thought it was going to be like, oh, I have to find the special thing that nobody else is using. And it turns out, actually, no, we want to use what everyone else is using. We just want to use it sensible. And because we're home retail traders, we're not trying to do all these big crazy things. We don't have to nail the top and the bottom. We can just get the meat of the trade in the middle, and that's what we're really going for. And then I don't know, that made trading so much easier for me. I wasn't trying to outsmart everybody. You don't have to outsmart everybody. You just have to ride the waves with them. I just saw that question. So if I will hold my position until we get into the money. So, I'm not just picking an arbitrary contract. I'm picking a contract that I think will go into the money. So if I'm looking at resistance, that's just kind of roughly here at 693, 694. I'm going to buy the like 693, 694s to see if those go into the money. In this case, I actually bought the 690s. So I'll do a risk to reward kind of analysis. If I want to buy 3 of these or 5 of these, I kind of I want to do a presentation on this, but basically I have like different tiers of positions that I'll use. So I got like a tier 1 position. That's going to be my heaviest position for my most confident trades, my most confident setups. And I have a tier 2 that'll be kind of the middle of the road average trade size position. And then like a tier 3 would be my smallest position size. I probably have Lotto after that. Lotto's not with that, but Lotto would be even smaller. So I have those 3 positions. Even if I have like an A+ setup, but I think I'm rushing it, I might hit it with a tier 2 position size and then be averaging in. But when I'm doing this, I have to go then look at the option chain to see how expensive these are. So if I want to go full size position, is that $500? Is that $1,000? Is it $10,000? Whatever it is, I know what my budget is, and I want to be able to trim on the way out. I don't want to be in just one contract. It's hard because you want to like diamond hand your one contract, but it doesn't work very well when you only have one. You want to diamond hand your runner. You want to take profits on the meat of your trade and diamond hand your runner. So that's what we can, I want to have more than one contract. So I need to make sure that if I'm looking at these March contracts, these are kind of expensive. If I think it's going to go up to 704, maybe I can afford 1 or 2 of those, but I can't afford 1 or 2 down here. And then on the flip side, if I can't afford this trade at all, then I either need to look at a different date. Maybe, okay, March 20th, that's like almost 6 weeks out. Maybe my trade doesn't need that much time and I can squeak it in a little bit, but I don't want to push it so far. So that is part of it, is budgeting your trades is kind of part of that. But like I said, I'm trying to organize my thoughts so I can explain this real well. But I do kind of think of it in 3 position sizes plus Lotto. When I buy a Lotto, it's throwaway money. It's like, okay, I made $1,000 on this trade today. I'm going to bet $100 of it on this silly eBay earnings or something, whatever it is. I just assume I'm not going to see that. And if I do, great. But so yeah, then you can kind of come in some of these other dates. You can see the 704 instead of being $6 something is now $4 something. And again, we're multiplying this by 100 to get what our position size is going to be. So if our budget was 1,000, we could only take 1 of the other trade, but a couple weeks earlier we can take 2. You just, again, don't want to squish the trade because it really sucks when you run out of time and the thing hits your target right before that. But I do want it to go in the money. So that's what I'm looking at. So if I was buying down here at 680 and I was looking for it to go to 694, I might want to see if I can buy the 690s. And then once they're in the money, they're going to be worth a lot more. And that's that pump that I'm looking for. Things get kind of more protected once they're in the money too. The value doesn't get sucked out of them as quickly. So when an option is out of the money, it's more susceptible to some of these, to some of the volatility, because there's less of a chance for it being worth something, being valuable at all at expiration date, where in the money kind of has a little bit of a buffer built into it already. So that's why right now, I mean, I'm just like, I just booked that SPY because, yeah, we could keep moving up, but the February 20th expires next week. And I don't want to take the heat on it. Plus, I'm already in March. I got in some March calls. So I just keep rotating through the dates like that. So when I always say like, oh, this month's SPY calls, it's because once they get cheap, I buy them. But how do you know it goes to your target price? I don't. Uh, I I don't know it's going to go to my target price, but what I'm looking at is where it's more likely to. Um, so I know when it gets down to these lower extremes, and this is just the market. I kind of see it like breaths. We have inhales and exhales, and inhales and exhales. The market doesn't go straight up ever. I'm still on a daily chart, but because this is where I get a lot of my swing trades, but I don't know that I could be wrong. I don't win 100% of the time. Sometimes I lose. But I know that if I wait for a really good price way down here at the lower extremes, that's when I'm most likely to be right and most likely to profit. And I know that when we move to the extreme lows, we are decently likely to move to at least the median, which is I had 690 calls. So that was my median, and then hopefully some more. So that's why I take big trims when they start to go in the money, and then I'm looking for that big burst where we can get 300%, 400% after that. So I don't know it's going to go to the target price. I just know that a lot of the times it does. I did buy, is this still on the screen? I did buy calls here. So I'm not right 100% of the time. I bought calls here and I lost money and I just had to wait. And really what I ended up waiting on was drama. So I'm expecting drama. Here's some drama. We gapped up, then came way back down. I felt a lot safer about buying after we put in a normal candle. And I don't even know if I bought this day. I actually think I did. But that's the thing that I'm looking for is like if I'm wrong and I end up stopping out, then I'm looking for the normalcy to come back. But I don't want to buy at the top. And for this strategy anyway, the breakout strategies, you can do that. But I don't want to buy at the top and sell at the bottom when I'm just trying to take advantage of these ebbs and flow breaths that the market takes. Well, the one I was thinking of was Apple. So let me show you that one because this one's a little bit more top of mind. The other thing I was going to say is I was showing you the daily chart, but I look for levels on the hourly chart a lot. Here, I'll just do it real quick. So this will I was really hovering over this, but if I want to get more precise on where the 695, 96 area is, I usually go down to the hourly. The 4 hours are pretty nice too. And at that point, I can kind of turn off the Keltlers if I want and really see where these levels are. This is where the whales stopped doing business. This is where the whales ran out of order or finished doing their business. It's at these extremes. So these are the same levels that I want to come back and watch later. Okay, so on to the Apple deal. So I went out to the hourlies, but I don't even know. We might have to go more than that for this one. Yeah, I'm gonna go to the dailies. So this is just a different setup, but what I was looking at, this was earnings week too. So it was, the last couple weeks have been last 3 weeks, not really this week, the 2 weeks prior to this were earnings season for tech. So there's a lot of drama in tech, but what I had noticed is everything was moving lower. So we had, this is not lining up right. I'm trying to find my crosshair, but basically tech was just looking very, 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 very dumpy. And one of the things that was holding the strongest was Apple. And I was zoomed way out like this, but I was looking prior to earnings. So we're dumping. Everything was looking very dramatic, but Apple had really been holding strong. Everybody else is like flat and then dumping. Apple had been holding. So that was kind of an outlier. So that's why I went in on that Apple. I ended up buying it too early. I think I bought it up here, had to average back in down here. But that was one of the ones where I was looking at it to kind of be an outlier. So it's kind of protected by the tech sector. So that way, if everything else is dumping and it's at those low extremes and Apple's holding the strongest, it's going to be the first to pop because it's the strongest one in a sea of death over here. And that's why I ended up in that Apple trade, even though it was frustrating because I jumped the gun on it a little bit. I even told y'all I think I'm jumping the gun on this. But I hope that helps. I thought we could kind of I thought it was a good time for a refresh on kind of what we've been talking about lately since we have a lot of new people. I don't want to be involved in a market that's okay, well, let me answer this question. I don't want to be involved in this. So yeah, maybe you could short that if we break out of there. This is not reliable trading to me. I might make $50, but I might lose 200 and I could just go out and enjoy the sunshine. But if you're wondering if I would short the SPY up here, the reason I favor bullish moves on this, every once in a while I will, especially when the market is trending down. Right now we're still trending up. So like back here, I was more interested in selling the pops, but when we're trending higher, the safer trade is buying the pops. So you can also try to short or to buy the dumps. I said that backwards the whole time. When we're in an uptrend, I want to buy low, okay? So when we're in an uptrend, I want to buy all of these little dumps. I would sell the pops if we were in a downtrend, which we're just not in that often because that's the way the indexes work. But we've got down here when we were in a little bit of a downtrend, come back up, then maybe that would have been a nice little thing to get. But I didn't take this and I don't know why I would have because we're just still in a happy little uptrend. The EMAs that I have on here are to help me out with that. So the middle one is a 21. So that one can really just be a mean because that's a pretty fast EMA. So that lets me know if just very, very generally, are we above or below the median? Are we in a short-term up or a short-term down? And then the bigger your EMA gets, or SMA, actually the yellow one's the only EMA. I did SMAs on this. I don't know why. But the 50 is this next one down here. And that's another one that will give you a better sense, especially on these higher time frame charts, of what a more general trend is. Obviously uptrend right now because we've barely gotten below it. And see, that could have been your thing too. Is like if we're buying down here, we got confirmation at the 50 that we're getting a little too deep. Maybe you want to only buy when we're at or above the 50. And then this other one's the 200. When we get into really major situations, we have the 50 and the 200 cross. That's another swing trade strategy. Probably not for today. There you go. Thanks for showing us. Touch the 6-year lows to the penny and alerted. I think the higher time frame charts are slept on. That's kind of the same thing. So do you want to short at the top? Because you can short that top and you lose. You can short that top and you lose. You can short that top or you lose. It's against my religion to short all-time highs. I guess that's how I could answer that one too. That's indexes too. I do not short all-time highs. But for me, it would be more like going long down here. But what we're talking about otherwise, man, the monthly would have been better for this. So we had a low way back here in 2020, shot up. I guess this was like COVID, we're mailing everything. Then price comes back down. Do you see how patient this is? And so when we're day traders, we want to let's get money right now. I want it right now. I want it right now. But so one of the things that I'm trying to show everyone is like when you don't have all your eggs in one basket, you can do this kind of stuff, which is what BMO's kind of specialty is, where it's a lot slower, but then you have big, beefier moves. You have to be more patient with it. Maybe you have to have a little bit more capital, but this can be the goal where we start out day trading, build some money to trade options with, start building a swing account. The swing account, nobody freaking believes me, but I have my broker statements, I guess, if I need to. With these options, you can double your accounts. I've doubled my account overnight on swing trades several times. That's actually what really helped me get it from a few $100s up to 5 figures. It's 6 now, but that's how I'm not going to double it now. But when you have a small account, you can double it. One day I had like $8,000 and next day made like 9,000 on an earnings play. And that doesn't happen very much. But when you're really patient, you can capture those. If you're impatient, it's hard to capture a lot of this kind of fun stuff. Oh yeah, unless it's Snapchat, because BMO only shorts Snapchat. One earnings, it shot up though. And I was like, yeah, we're not talking about that today. I can tell. We like the APLD. Did you call out any for 2027? I don't even think you did. He's calling those out. And Microsoft too. I noticed the Microsoft that BMO called out. It is the last available option possible. Like that option expiration, those option contracts were just released when he announced that. So he's going as far out as possible. But those can get some really, if you're right on those, you're really right. So it's fine. I don't want to set up expectations so you can double your account with options, but you can take advantage of some really crazy moves. You can also lose everything. Sometimes I lose 100% of my premium. So there's that. That is that risk. If you lose 100% of your premium, it's usually because either you weren't paying attention or the market did something really stupid and dramatic overnight and you didn't have enough time on your position. It happens the most with earnings. For leaps, you want to have a big account. Yeah. So that's what I was showing you. So the Microsoft, BMO's Microsoft. Those are $6,000 a piece. Bull Barbie's Microsoft. $2.50 a piece. So that's again what I was talking about. Like the sooner expiration is always going to be cheaper. But that's where that risk to reward. I mean, there's so much math in trading. You kind of just have to find your lane and work out your own little situation. But for me, that has been combining the day trading with adding swing trading, with adding, some of these leaps too. I didn't used to be able, a $6,000 option, like I would have shit my pants over that 5 years ago. And now I'm like, oh yeah. But that's what you want to grow to, and you're not going to do that all in one night, and that's okay. Yeah, 250. So 250 is 250, not $2. Yeah, but he posts some faster ones too. So that if you want to follow BMO trades, the less expensive ones are going to be the small caps, which are crazy. But you can definitely tailor your trades. I mean, some of those are $2. So you want to spend $100 on the trade, you can still buy a whole bucket of them. You want to spend $1,000 on the trade, you can get a bigger bucket. But yeah, those are things that most of us are not watching. So, and of course, it's always your trade. I'm going to point that out. Any idea that you take from the group is your trade, but we do like to share ideas so you can see what traders who are doing the kind of thing that you want to do are doing. But yeah, the other thing is like when you have a larger account, you have to be able to take bigger swings. We were talking about this a little bit too. So I separated out my short-term options from my long-term because it sucks when you go on and you're like, I just had a great day. I just made $3,000 on my short-term Microsoft and Apple and SPY calls, but my account shows that I'm $4,000 down because this leap from 2028 is down. It ends up being kind of silly. You gotta take the leap, right? Isn't that on Tasty's thing? They have something about taking the leap. And you can do the same thing. So like, I'm gonna wrap it soon. So final questions. But on futures, we can look at the S&P, the NASDAQ, the Dow, the Russell, whatever. You can do the same thing with the options. So we got SPY is the S&P 500. QQQ is the ETF, the main ETF for NASDAQ. There are other ones. So there's reverse leverage, there's 3 times leverage, there's 10 times leverage. If you really want to get crazy with options or all that, this is where we start. SPY, QQQ. So then we have the diamonds. That would be the Dow Jones, and IWM is the iShares Russell, blah, 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 blah. These are all the main ETFs. Yes, like that. You'll see them calling like this SOXL and stuff like that. These, that's for another lesson, but you can do, they have ETFs for all kinds of weird, crazy ideas. So I'm an index trader. I trade the S&P 500 and the NASDAQ, mostly the S&P 500, but the NASDAQ tracks that really nicely. And I can get plays where we're either doing a catch up or, it's kind of based on the pair and how they're behaving. Because that's my focus, I'm also watching the Mag 7, the main tech stocks, Apple, Amazon, Tesla, Meta, Google, Microsoft, Nvidia. That's not the right order anymore, but those kind of guys. Those are the most heavily weighted stocks. And so I'm paying attention to what they're doing in order to trade the indexes, because if Nvidia is dumping all day long and the indexes are trying to bounce, it's not going to happen. So because of that, that's my watch list. I'm watching Apple, Amazon, Tesla, Meta, Google, Microsoft, Broadcom, Nvidia. Sometimes I'll have other things. So options traders tend to get pet stocks. Those are my pet stocks. Some people get AMD or Oracle, or they might be in healthcare doing Johnson and Johnson, or they might be doing OKLO, doing military stocks. So you tend to kind of find sectors that you like, or at least your favorite things in particular sectors. So if you want to participate in something in healthcare, then you can go to Johnson and Johnson and see what they're doing. Or if you want, if banking's down right now, but you think banking in general is about to recover, you can go look at the banking stocks and see if Bank of America has been holding strong, or how Chase Bank is doing, and just look at those groups of things. So it's always based on an idea. First, you have an idea or a hypothesis of what's going to happen. You can troll around Wall Street bets and stuff. The problem is, I think a lot of that stuff is kind of toxic poison, and it gets in your head a lot because there's so much monkeying around. I mean, it should be fun. I think those are fun places to go, but they're not where you should really get serious trade ideas. But that's what happens, is we'll end up getting pet stocks. So you'll see BMO will be posting the same stocks a lot. When I first started trading options, I was basically Apple and Disney. Apple, Disney, Apple, Disney, Apple, Disney, all day, all day. And then I added Tesla when my account got bigger, and because at the time Tesla was like $700 pre-split. Yeah, that's a good point, BMO. So what's hot changes? When I'm at BMO and H Nude and like the main OG crew around here, that was during COVID. So we were watching Moderna, like all of the vaccine names, Johnson and Johnson, those were huge because they could be massive movers overnight. We were trading the heck out of that. And then travel was shit. So I wasn't as big into the cruise lines, but a lot of people were doing puts on the cruise lines and the airlines and all that kind of stuff. But then at a point, it's like, okay, they've been beaten for years. They're going to have a reverse move at some point. And so then there's kind of another breath of air. Pot stocks too, like marijuana, cannabis. That'll be, whenever there's legislation, that'll be a hot ticket item. And then you just kind of go look up, or these days you can even ask ChatGPT, what are some good cannabis stocks I could look at, because there's a farm bill going towards whatever. Or you could be deep in fed alcoholics. Oh yeah, yeah, PFE. Yeah, we had some time on PFE. But I tend to focus on tech. Plus, I need to be aware of what's going on in tech. So tech earnings, it's about 2 weeks long. The markets move a little bit differently. I tend to position a little bit differently. I'm not doing swing trades the same because they can be a little bit weird. Because if you have Nvidia posting bad earnings, it's going to move NASDAQ. Same with Meta, same with all those. Yeah, we got a lot. So OKLO was a massive winner for me last quarter, because that was and that was, I don't usually trade OKLO. I just heard a bunch of people talking about it, and so I went and looked at it just because I'm paying attention. But I don't really follow any one thing. It's more about just staying in touch with what's going on in the world and then getting ideas that way. And the data center, so semiconductors obviously were a big, maybe even before the OKLO stuff, with Nvidia taking off. I mean, Nvidia was under $100 not very long ago. And then, like, I remember Boeing really pissed me off. I was in a group that was trading a lot of Boeing, and I kept losing money on Boeing. So it was like on my ban list. So we get that too. It's like, no, I just don't like trading Boeing. It's a shit stock. I was mad at Amazon for a while because I had a play just not work, and then I was just like kind of not trading Amazon because it had left a bad taste in my mouth for a little bit. I had to recover. I'll see y'all soon. Thanks for joining, and have a good lunch.